Insurance needs analysis is a systematic process used to determine the type and amount of insurance protection required to safeguard individuals, families, and businesses from financial loss. The purpose of the analysis is to identify risks, evaluate potential financial consequences, and recommend appropriate insurance solutions that align with a client's goals and resources. Because insurance serves as a risk transfer mechanism, effective planning begins with understanding the exposures that could disrupt financial stability. Financial planners assess personal circumstances, financial obligations, asset ownership, family responsibilities, and future objectives to develop customized recommendations. A thorough insurance needs analysis ensures that coverage is neither insufficient nor excessive, promoting both protection and cost efficiency. The first step in insurance needs analysis involves identifying risk exposures that could create significant financial hardship. These exposures may include premature death, disability, illness, long-term care needs, property damage, liability claims, and business-related risks. Financial planners evaluate both the probability and severity of potential losses. Some risks occur infrequently but carry catastrophic financial consequences, while others are more common but less severe. Understanding these distinctions helps prioritize insurance needs and allocate resources effectively. Risk identification also considers family structure, age, health status, employment situation, income sources, and existing assets. Comprehensive identification of exposures provides the foundation for developing an effective insurance strategy. Life insurance needs analysis focuses on determining the financial resources required to support dependents after the death of an insured individual. Planners evaluate income replacement needs, outstanding debts, mortgage obligations, education funding goals, final expenses, and future financial objectives. The analysis may use either a needs-based approach or an income replacement approach to estimate required coverage levels. Needs-based analysis considers specific financial obligations and future expenditures, while income replacement methods estimate the capital required to generate ongoing income. Because family circumstances change over time, life insurance needs should be reviewed periodically. Proper coverage helps ensure that survivors can maintain financial stability and continue pursuing important goals. Health, disability, and long-term care insurance analyses focus on protecting income and managing healthcare-related risks. Disability income insurance needs are assessed by examining current earnings, living expenses, emergency reserves, employer benefits, and expected recovery periods. Health insurance analysis evaluates medical coverage needs, cost-sharing arrangements, provider access, and affordability considerations. Long-term care insurance planning considers future care expenses, longevity expectations, family caregiving resources, and retirement assets. These forms of protection help preserve wealth and financial independence when health-related challenges arise. By evaluating multiple risk categories together, financial planners create integrated protection strategies that address both current and future financial vulnerabilities. Property and liability insurance needs analysis involves assessing exposures associated with homes, automobiles, personal property, and legal obligations. Property insurance protects against financial losses resulting from damage, destruction, or theft of physical assets. Liability insurance provides protection when individuals are legally responsible for injuries or damages suffered by others. Financial planners evaluate replacement costs, asset values, legal exposures, policy limits, deductibles, and potential liability risks. As personal wealth increases, liability protection often becomes increasingly important. Comprehensive property and liability coverage helps prevent significant financial losses that could otherwise threaten long-term financial security and undermine broader financial planning objectives. Once insurance needs have been identified, the next step is selecting appropriate policies. Insurance policy selection requires careful evaluation of coverage provisions, exclusions, limitations, premiums, deductibles, benefit structures, and contractual terms. The objective is not simply to purchase the lowest cost policy, but to obtain coverage that effectively addresses identified risks. Financial planners compare policy features across multiple providers and assess how well each option aligns with the client's needs. Considerations may include policy flexibility, guaranteed provisions, claims processes, inflation protection features, and available riders. Thorough policy evaluation helps ensure that insurance solutions provide meaningful protection when losses occur. Insurance company selection is equally important because the quality of protection depends on the insurer's ability to fulfill future obligations. Financial planners evaluate insurers based on financial strength, claims paying ability, reputation, customer service, underwriting practices, and product offerings. Independent rating agencies provide assessments of insurer financial stability and can assist in evaluating an insurer's long-term capacity to meet contractual commitments. Since many insurance products remain in force for decades, selecting a financially sound company is essential. An insurer's operational efficiency, claims experience, and commitment to policyholder service also influence the overall value of coverage beyond the contractual benefits provided. Insurance needs analysis and insurance company selection work together to create a comprehensive risk management framework. Accurate needs assessment identifies the financial exposures requiring protection, while careful policy and company selection ensure that coverage is reliable, appropriate, and sustainable. Financial planners periodically review insurance programs to reflect changes in family circumstances, asset levels, health conditions, business interests, and financial objectives. Regular reviews help maintain adequate protection as risks evolve over time. By integrating risk identification, coverage analysis, policy evaluation, and insurer assessment, financial planners help clients build effective insurance portfolios that preserve financial stability, protect accumulated wealth, and support the achievement of long-term personal and financial goals.